Hey guys, welcome back to the channel. Today is November the 8th. It is actually Tuesday morning. We are pre-session here. And I thought I want to kind of clear the air up about why I trade supply and demand versus, purely a support and resistance. I know there are a lot of people who probably trade support and resistance, which is more of a kind of a break and retest strategy, meaning price either breaking through an area of resistance, pulling back to a swing, which was once resistance is now support, or which was once support as price broke through it is now resistance. So, if you're a support resistance style trader, I take my hats off to you. Nothing wrong with doing so. But I think a lot of people have been misinformed or told lies in a sense from maybe so-called gurus that proclaim to be such great teachers in the world of trading, and most of them, or a lot of them, probably don't do much trading themselves. But they're, like I said, it's in the past, they're probably out to sell you some type of informational packet or strategy or class or course, whatever the case is, just to kind of try to, get you to buy into what they're actually selling. And that's what they are. They're marketing products, and they are just marketers or advertisers. They like to market things to make money that way, but do not really know much about actually how the markets move. But support and resistance, yes, it can work sometimes, okay? But I think if you really want to be a solid go-to, professional or experienced level trader, you're going to have to understand, I say this many, many times again, what the market is really trying to accomplish. What is the goal that the banks and the institutions, the bigger players at hand, are really trying to accomplish? And that is, they're trying to fill orders and get in at great prices. So if they're looking to sell, they want to get in when prices are higher at a certain area. And if they're looking to buy, they want to buy at a cheaper price. So you have to understand that, and they're leaving footprints behind in the market so that you can be able to see those type things as a trader, as we as retail traders, so we can see those things and kind of move just the same way they do. So if you ever see like where the market may break through a level, say it's made a swing up, made a start to form a level, made a high, higher low, it breaks higher, breaks that area of resistance above, so it's created a full swing, and then price pulls back. Most traders are looking for price to pull back to that, I guess, the crown, the head, or the neck, which was once resistance, has now become support. They're looking for price to pull back to that area there, and look for the rejection and trade. That's kind of a break and retest, pulling back to an area of support, and when they see rejection, they trade. So what happens there a lot of times is you have to understand the banks and the institutions, the bigger players at hand, they know, the market makers, they know what retail traders are trying to accomplish. What they're looking to do is take trades at break and retest, price breaking through an area, say for instance, and I'm going to show you an example, an area of resistance or an area of support, price pulls right back to that area, okay, they see the rejection, maybe it's a close of a candle, break of a candle, whatever the case is, and they go long. And then the moment that you actually go long, or traders go long, price then comes right back against you, okay? And there's a reason why. You have to understand that reason why, because the market makers, the bigger players in the market that are pushing or the gravitational force of the market, they know where traders in most instances are going to try to trade from, and they know where you're going to put your stop at. So first of all, they know where you can put your stop at. They know there's going to be a resting area of liquidity there once you got into that trade. So they may push the market a little higher. Once you went long, they'll allow the market to go up a little bit. And then they'll just flat out turn the market back around, stop you out, grab that area of liquidity, and then move to an area where they want to buy that's maybe at a cheaper price. So you have to understand that, okay? So that's why, to me, trading support and resistance, it's just, I'm not saying it won't work sometimes, because sometimes you do see price pull right back to an area of support or resistance, reject it, and then take off. But in most instances, if you want to trade the professional manner, I guess, in a sense, and you want to understand the bigger business, in a sense, what's going on in the markets, and think like, the powers that be that are actually driving the driving force of the market, then you have to understand in most instances, and looking at going back into your charts and seeing, oh, is price, most of the time trying to accomplish or move into an area where there's supply and demand, or bouncing off support and resistance, whatever the case is. And I just don't want to take a bounce. I want to get into a better trade. I want to get in just like the market makers. I want to get in just like the banks, the institutions, the powers that be. I want to move like them. I want to be like them. I want to trade like them. So the thing about it is that I want to get in with prices cheaper, or I want to buy with prices cheaper and then look to sell with prices at an area where it's more expensive. Okay, and that's how they think, and you have to be able to understand and see their footprints. When they're placing making big transactions, placing big orders in the market, okay? So I'm going to show you some examples. Now, again, if you trade some support resistance, I am not trying to, beat anyone down or whatever the case is, because sometimes trading right at a break and retest, a price comes back to a level, whether it's support or resistance, it will, sometimes reject, whatever the case is, and may move in your favor. But if you ever seen price breakthrough, meaning have a break and retest type setup, and then price pulls right back to that level, whatever the case is, or the top end of that swing, and then it moves up a little bit and then folds. Okay, you have to understand what's going on there. And I'm going to show you an example, and I'm going to explain it kind of in detail, so that if you don't understand supply and demand as a whole, I kind of want to point out to you what's going on behind the scenes. What those so-called gurus are been lying to you about, or not telling you the truth about, or what the market has kind of misled you in a way to kind of give you a better understanding, what is really going on behind the scenes, so that as a trader, maybe you want to kind of start leaning and gravitating to understand supply and demand a little bit more, and it probably will start shifting, hopefully, your trading, around. Meaning that you actually become more profitable, whatever the case is. At least you'll understand, what to look for in the market. And when you see price pull back to key zones, which is supply and demand, you'll understand what's going on there. So here's an example right here I'll show you. Excuse me. This is a demand setup pretty much. But what I want to show you, there's a break and retest that's going on, okay? So if you follow the structure here, the market, what it's doing is making lower lows and lower highs to the downside, okay? But then it makes this low right here. What does it do then? It turns around and starts making these slightly higher highs and higher lows. Now, these are swings to the upside, right? Push up, pull back, it pushes up, pulls back. It breaks structure right here on its move to the upside, okay? But you have what's called a break and retest. Price pushing up, pulling back, breaking through resistance right here. Pushes up right here, pulls back, breaks through resistance, and then also break through this area of resistance or structure right here as well, okay? So as it's moving higher, it's breaking structure, but it's also forming what's called break and retest. So price pushes up, pulls back, breaks higher, pulls back, pushes up, breaks higher, and then pulls back. Now, on a break and retest, pretty much the kind of situation or setup, most traders will be trying to look for an opportunity to do this, where price pushes up, makes a high, pulls back, breaks higher, and now you have a swing to the upside, okay? Let me move this down just a little bit so I can grab this tool here, just this arrow. So price has done this, pulls back, and then breaks higher. What most traders will do at this point here, they'll look for a pullback to this zone, right, or to this area right here, which was resistance, is now an area of support, which I call the head or the neck of a swing, okay? All right? And we all know where demand is. If you know how to trade supply and demand, it's sitting back in this area down here. Demand is always going to be, at the lowest point in the lower point of a swing, at the body or the bottom of a swing, and supply is going to be at the top end, or the top of that swing. And once that swing is created, meaning price pushes down, pulls back right to the top of it before it makes its final move to the downside, it's going to be tucked back in that top portion of that swing. So what we have here now is a break and retest. Prices broke this area here of resistance, broke this area right here, okay, pushed up, and most traders are looking for a pullback to this area right here, okay? So it pulls right back to the neck or head of the body of the swing here, okay? And once it gets there, most traders, once they see, a failure here, meaning the next candle closing to the upside, whatever the case is, they're going long. Well, look what happens if you did that, if you took that type of setup or trade, whatever the case is. And sometimes it will work out and the market will just kind of push higher. You'll get, this is driving me crazy here, but anyways, you'll get something like a price will pull back and then it just blast off. Sometimes, but if you want to trade the correct way and you want to understand how the bigger players in the market are actually moving, then you've got to understand, what is their overall goal. And I said this at the beginning of the video, is they want to buy with prices cheaper and they want to sell with prices more high or more expensive. Okay, so that's why supply and demand is so powerful. So take a look here. I want to show you what happens here on a break and retest type setup, where price pulls right back, like I said, to the neck or the head of the body of a swing here. Okay, so it pulls right back to this area here where this arrow is. All right. Then it bounces, it rejects, close of a candle. Most traders, boom, will say, okay, I'm going long, all right? But you got to be careful, too, because you're already back at the tops right here if you got into the situation right here. But let's just take a look at this, okay? Because what I want to show you is, let's take this arrow here away. And let's say the market actually went a little higher, okay? Went a little higher here. And we could, we could take a look at this as well, but went a little higher here, and then it dropped back. Come on. It's my webcam here. All right. Then pull us back to this area of support right here, okay? So what most traders will do is, like I said, they'll wait for the break of a candle, some type of rejection, or whatever the case is, and then they'll go long. And look what happens right here. Look what happened. This is where the market makers are want to fake traders out. They want to say we're going to capture them, we're going to trap them, and this is what happens when most people talk about traps. People trade break and retest back to the neck or the head of this area right here, okay, out of the swing. All right, right back to the area of support. So price pulls back, you go long right here on a rejection, whatever your failure or rejection, whatever classifies that for you, whatever your classification of a rejection or failure may be, and then you go long. Guess what happens? The market turns back around and it's scooped lower, it pushed lower. You got to understand what's going on there. The market makers, they know what traders are going to do most times. They're going to take a break and retest. Price up, price pushed up, pull back. It looks like it's bullish here because now it's making higher highs and higher lows. Even though this is on a lower time frame chart, guys, this is on a 12 range chart, but I'm still trying to show you, even whatever chart it may be, what's going on here. They say, okay, price is broke structure here. It's made a high here, broke structure. It's breaking and making new highs. It's pulling back to support now. I'm going to take a trade. Forget the rejection on the pullback to support here to go long. Okay, so you go long. You may got a little bit going up. So if you got in, say for instance, the break of this candle here at 89, the market pushed up just a little bit higher, maybe a point and a half, 2 points. And guess what? All right, you think you're solid. You think you're golden, and look what happens. The market turns. All right, why? Because once price comes back to this area of support here, and you've taken this trade right here, at the bottom end, once price starts moving to the upside, there's support sitting right, there is support sitting right here, but there's also liquidity, okay? It's also going to be liquidity. So liquidity is going to be found in most instances, if you think about it, in almost all instances, if it was a break and retest type structure set up right here, push up, pull back, break, pull back, okay? All right, so once price comes back and pulls back to this area of support, it's creating a low pretty much right here on a pullback right here, okay? Which right at each top or each, I guess if you want to say each low or high of a move, there is going to be what's considered that's going to be support or resistance, as well as liquidity is going to be resting right there. So once you get into this trade and price pushes up, most traders are putting their stop where? Right at the back end of this candle right here, this green candle, okay? Because they got into the trade. They don't want price to come below this area here. Your stop sitting there, but guess what's also sitting there? Liquidity. And the bigger powers to be know what's going on there. Traders stops are sitting there, and it's liquidity sitting there. So your stop actually becomes liquidity in a sense. So what happens is they know that they're going to come down, and this is the trap. This is the setup. They want you to go long here, okay? So they can. So that you put your stop right here, and now your stop becomes liquidity. Then they fool you. The market pushes a little higher. Then they say, okay, we're going to trap everybody, push the market back down, and take their money. And boom, that's what they do. They fold the market, and guess what they're trying to do? They want to move the market back to lower areas, which makes sense. They want to get in with prices cheaper and drive the market back up because they can capitalize on a move like that and make their investors more money, and that's their overall goal, is to get in when price is cheaper and make and to capitalize on that bigger move. Okay, so that's exactly what happened here. Break, price pulls back to support. Boom, traders get in right here. Those that do not know really what's going on, they're just trading the ebbs and flows, meaning they're trading, a break and retest type structures. Price pulls back, or I'm going long. If price rejects this, pull back to this area of support or to this area of resistance, whatever the case is. Price is, moving lower. Say like right here, it made a low here, pull back, boom, breaks lower here, breaks. If it came back right here to this area, and then most traders are probably trying to go short, whatever the case is. But in this instance, price actually push up a little higher. But anyways, we're not talking about that area there. What I'm trying to get you to see here is that what happened here on the structure break here, and then price breaking and retesting this area here of support. Traders you go long here. You may be able to get maybe a point and a half most out of it before price turns back around. They stop you out, and then you lost your trade, and you lost money. Okay, and then what do? They bring the market lower to do what? Tap into demand. Okay, so that's why supply and demand is so important to me, because I want to be able to move and understand how the banks and institutions are actually moving. Because they're the ones that are putting the big money in the market. And all we want to do as retail traders, I say this all the time, is move like them, okay? Move and think like them, okay? When you can think like them and understand what they're doing, okay, because they're leaving footprints all over the market, all over your charts. You can see it. Once you see that, then you trade like them, okay? You wait for those opportunities. Always think about it like this. Buy when price is low, looking for areas of demand. Demand is going to be the area. Demands are going to be the areas, okay, where price is going to be cheaper. Supplies are going to be the areas where price is more expensive. So you got to think, they want to buy when the market's low, and they want to sell when the market is high. Break and retest may work sometimes, okay? All right, may work sometimes, all right? And they may allow you to allow it to work sometimes, okay? Because they want traders to trade like that, because it is a strategy or tool they use, or a strategy they use, because the more that you trade break and retest, the more opportunities it gives them to actually profit and take your money, okay? In the same light. So think like the bigger players, buy when price is low and sell when it's actually high, and stop listening to so-called gurus that are feeding you lies about support and resistance and how support and resistance to be the holy grail of actually trading. I mean, support and resistance, you see on the charts, and sometimes, like I said, price will pull back to those areas of support and resistance and kind of take off. But if you really want to understand behind the scene of what's really going on behind the charts when it comes to, I guess I classify it as manipulation of the financial markets, the bigger players they're the driving force, and they are manipulating the markets, okay? But you have to understand why they're doing it, because it's about business. They want to be able to get in when price is cheaper and sell when price is more expensive, right? So they know if people get in right here, or traders trade right here and go long here, guess what? They're going to allow it to happen just for a short period of time, because overall trading is about kind of like a game in a sense. They have to move the market in such a way to stop hunt or shop for stops, whatever the case is, to stop traders out. And they know people put in trades on right here. All right, you put your trade on right here. Like I said, your stop now becomes liquidity, and they're going to allow you to think, because it's a psychological game. Okay, this business is very psychological. They want you to think that you can capitalize, and boom, they got you. They gave you a point and a half or 2 points, whatever the case is, and then at that point, you think the market's going to push higher, and you're enticed. Oh wow, the market's going to push higher because it's making higher highs and higher lows now. It's broke structure. But guess what? They fold the market down. They push the market down. They drive it lower. Okay, and to do what? To take your money, to stop traders out at every level below. And guess what happens then? They want to at that point they're down here. Tap back into an area of demand. Why? Because price is cheaper here. They can then, get in at a lower price, and look at this big, massive move they made to the upside. They capitalized majorly. So they start filling orders down here at the area of demand. Boom, at 36.80. boom, way up here, you're already past 3,700. Okay, that's 20 points, over 23 points, 24 points, 25 points, whatever the case is. Massive move. So everybody who took this trade right here, if you're a retail trader and you do not know what's going on, you have to understand behind the closed doors and understand how the powers to be move, how they drive the markets. They are the driving force in the way that this business is set up. All right, and the sooner that you understand that as a retail trader and understand the purpose of supply and demand and understand why big moves happen or come out of zones where price is cheaper, you got to understand those type things, okay? And the sooner you do, the more profitable you will become in the end, all right? But that's all I have to share with you guys today. I just want to show you that support and resistance, a lot of people do trade it, whatever the case is, and people are successful in trading. I'm not saying that they're not, because they may have a certain strategy to trade using support and resistance. But to me, if you really want to get in and where the probability of trading is going to be a lot higher, supply and demand. All right, I'll leave you guys with that for food for thought. But yeah, that's going to be it for today, guys. I got to get over it and get into the Discord and start doing some personal trading myself. And start engaging with those on Discord. So, but yeah, if you're interested in joining the Discord, find the link down in the description portion of this video below. Click on it and invite yourself in. It's free of charge. I'll show you that right now. Let me get off this tool right here. This is our Discord community. Let me bring this down. And pretty much each and every day, guys, we have there's actually two channels here: the general chat and then the trading floor. The general chat. This channel here is for future traders, guys. If you trade futures and you're watching this video right now, first of all, please take the time to go ahead and subscribe to the channel. Forgot to say that towards the beginning of it. Please hit that red button, that subscribe button. Make sure to click on the bell next to it. Turn your post notifications on so that you never miss one of the uploads on the channel. And I definitely appreciate you guys dropping a like on today's video just as well. But yes, the Discord, if you're willing to or want to or have interest in joining, find the link down in the description portion of this video below and invite yourself in free of charge. Again, the general chat is for future traders. If you are so, that you can come on there and ask questions. If you have questions about the future markets or anything pertaining to the future markets, general chat channel is the channel to go to. Now, the trading floor channel, which you see right here, which everyone is on right now. And again, we are approaching, I'm going to say this, almost 600 members here on the Discord channel here. But the trading floor is set up for individuals, for traders that are interested in sharing their levels, their zones, their trade entries and things like that. That's what we talk about on the trading floor. When the session is actually open Monday through Friday, we are on the Discord. We are sharing our zones, the levels of interest. So, you know, we kind of give those tips and hints away to kind of allow traders to, a lot of people trade, not trade, but understand and start to kind of, I guess, pick up and learn that way as well. Because when, say for instance, myself, I throw a level out there or a zone out there, and it may question you if you're on the trading floor and say, well, I wonder why that person traded at that level, whatever the case is. You can ask the question. You know, there's nothing wrong with doing so. But again, I trade supply and demand. A lot of people here probably trade supply and demand just as well. I'm sure a lot of them do, because we all are looking at pretty much at the same zones, the same levels, and sometimes, you know, we're not going to catch all of them or nor see them all, because as traders, you can't see everything, and you know that somebody else may be seeing, you may not see the same thing, whatever the case is, because there's so many levels, so many zones to trade from. So, but anyways, if you're interested in joining the Discord and come over to the trading floor, and you know, maybe you've already been trading and you want to join in and you know, share interest with us when it comes to, you know, levels and zones, your trade entries, and we have a fantastic group here on the Discord, guys, what I'm trying to say overall. So come join us. Simply find the link down in the description portion of the video. And that's all I have for you guys today. Hopefully you found some value in the content that I put into this video here. Again, this was, I'm trying to clear up maybe some misconception or lies about support and resistance or whatever the case is. You know, I'm not saying that it won't work, guys, trading support and resistance. Some people actually trade it. And if you do, kudos to you. But I think personally that the best zones or levels to trade from, if you really want to get in at a better price area, is supply and demand, and I'll leave it like that. Okay. So take care. I'll see you guys in the next video. I got to jump over to the Discord. We are about 15 minutes before the market opens here, pre-session, and I'll see you guys in the next one.